Hey guys, welcome to this week's podcast episode for the Financial Freedom Podcast. And I'm your host, Dr. Christopher Liu. As you know, I started out my career in real estate investing, getting my financial freedom. And now I'm happy to have Yochanan from the greater Austin area to share his expertise, his insights on the real estate market, conditions and projection, how to achieve financial freedom. I think real estate is one of the best ways to build wealth, safely store it. So, welcome.
Thank you so much for having me.
Yeah, I know. It's great to connect, and so tell people about your story. It looks like you're an ex Amazon engineer, and now you're in real estate. Tell us more.
Yeah, so I am originally from Israel. I graduated from the Technion. It's like Israel's MIT kind of, and I worked for Qualcomm and AWS, and then I moved to California. I was there for like 6 months, and I figured it's not the right fit for me. And then I asked Amazon to move me to Austin, so I did another relocation. And when I moved to Austin, I figured that I think it's a nice place. And that was the first time that I ever bought a rental property. It was the first time I felt like there's a market that can work for me. And then in
Yeah.
my first year, I actually bought 7 properties, and my friends thought that I'm mad. Uh, and then people started to come to me and basically found me like through Facebook and stuff and be like, "Hey, or like I want to do what you do, guide me." And I was like, I was in Armis, it's a cybersecurity firm after AWS. I was like, I'm a director at Armis. What do you want from me? Like, I'm not a real estate agent. But a second person came. By the third person, I was like, okay, maybe there's something in it. And then I kind of did it as a side hustle. But what happened is that over over my first year of real estate license, I closed like consistently 10 to 15 properties a month, became Austin's top producer per the public records, and basically ditched my tech job. And today that's what I do. I have this business called the Investory, because every house is both an investment and as a story, whether it's for investment and residential. And I try to help others kind of unblock their internal real estate, I don't know, investor, because it's so scary. And I remember it like coming from Israel, I didn't know anything about real estate, like especially in the US. So I had to learn everything from scratch. And then when I worked with an agent, the agent was like, here's a nice house. You should buy this one. Here's another nice house. You should definitely buy this one. And I was like, agent, that is not what I'm looking for. It's really not what I'm looking for. So yeah,
Yeah.
so that's kind of what I'm doing.
Yeah. And go ahead.
No, yeah. So today I own like more like about a dozen properties of my own. I closed something like 250 or maybe 300 properties. I don't really track the metrics over the course of the last 2.5 years. And yeah, I'm very excited to be here and on
Yeah.
the podcast.
Excellent. Yeah, I think a lot of cities like Portland, Nashville, are based on this Austin. Austin's kind of like the model city for this modern day success story. When did you get into the Austin real estate? Because that's kind of like you're probably the right place, right time, right? Tell
Yeah.
us more. Yeah.
So I moved to Austin in the second half of 2018. And
Mm.
when I moved to Austin and I wanted to buy an investment property, literally everybody that lived in Austin told me that I am crazy. I missed the train. It used to cost 150, now it costs 250. It's so expensive here. And I kind of like my conviction was, and it still is, that real estate markets, whatever they are, wherever they are, they look towards the future, not towards the
Mm.
past. It doesn't
Mhm.
really matter how much it was worth before. What it matters is it in its full potential now? And when I look at Austin and I compare it to comparable cities, like in my subjective opinion, comparable cities, basically people that are, if you are trying to live somewhere and you're considering Austin, you probably consider also Seattle, you're considering maybe Boston, Massachusetts, Reston, Virginia, San Diego, California, you know, Denver, Colorado, maybe. If you're looking at these cities, Austin is like so much cheaper. Even today, it still is so much cheaper. So that's kind of what got me there. And I'm thinking that, like you said, there's like, if you compare Nashville to Austin, you compare Austin to Seattle, it's like the markets grow and you have like a huge metropolis, like Seattle, for example, and it's exploding and it's so expensive. So people are moving into a somewhat comparable market that has opportunities, that has education, and then you have more supply, you have more demand than supply, prices go up, this area blows up and trickles down. So, I think it's always about like what is the area worth compared to its potential.
Yeah, it's one of the, with the exception of like 2008, where you have like these housing bubbles, a lot of, like I said, real estate is you buy and hold, and most of the time, it's just, are people getting priced out? Yeah, it's quite interesting. And then sounds like you're generating revenue through being a agent, and then you're also investing in a high growth city. One thing that is on, kind of make it relevant for the listeners out there is, especially with this interest rates, and they say commercial real estate could be the next thing to fall. Tell us more about, just again, this is not financial advice, but just what your conditions and projections.
Of course, I think that this market right now is extremely unique, and I think all of us are scratching our heads trying to understand what the heck is going on, because it feels like a recession, or like recession is looming, but per the macroeconomics and the data, it's not a recession just yet. And from my personal perspective, I think, it's kind of like Amazon to a degree, like the Amazon stock, and I'll explain what I mean by that. When Amazon started to grow, I think it's the P/E ratio. I'm not like a stock expert, but like the ratio, the P/E ratio was just way too large, and the company kept growing and growing because it had like a different, like the reality changed. The company invested the money in itself, so you don't really get a lot of profits, but you see just revenues jumping through the roof. And my comparison to this recession that it sounds maybe like completely unrelated, is that we don't really understand what's going on right now. It is unique. We have yet to see something like it. From that perspective, I think that investing in real estate and investing in general right now you need to be very safe about it. You don't want to take uncalculated risks. You don't want to buy real estate, take a loan with like 7 or 8% interest rate that is a negative cash flow of $1,000 and just bet that it's going to be better later, even though I think it might be. You don't know when it's going to be, and you don't want to be in that position. And I'm thinking that whatever your investment strategy is, whether it's real estate, whether it's stocks, whether it's Bitcoin, whatever, you need to understand your risk exposure and your risk volatility. You need to be truthful with yourself, and you need to deploy. The one biggest hurdle that I see from everybody is basically analysis paralysis. It's like you want to do something, but you don't feel like you're a top expert, and you can get yourself to this 95 T's comfort zone, so you don't do anything. But then the opportunity cost is so high. So that's what I'm telling every person that speaks with me, I'm telling them, understand what are you aiming for? Understand what is your risk exposure and your risk tolerance, and then deploy. And I think that for me, from my personal situation, and it definitely doesn't apply for everyone, a city like Austin works well because I'm not looking to cash flow. My properties today, I have, I think, maybe 12 or 11 or 12, and I have, I didn't inherit anything. I was just a simple engineer. I'm not I'm not coming from money, but I don't really make cash flow, but I have tons of equity, and I'm fine with that. Like I'm okay with it. My strategy is towards retiring in 5 to 10 years. That's true for me. It's not necessarily true for everybody. So I think whoever listens to this podcast or listens to podcasts in general is only doing that, one of the smartest moves of getting more educated, understanding whatever it is, whatever data they can understand. But the next step would be to execute. And that's what separates the actual investors from the ones who are just, listen to the podcast, look at the screen, and put their money in Bank of America and let inflation degrade its worth.
Yeah.
Does it make sense?
Yeah, really makes sense. Yeah, because it's interesting because I talked to a lot of people, and this is actually a new thing, but a lot of people that I talk to, they say they've never seen conditions like this. They've never seen markets like this. Yeah. There's just little pockets up and down, and it's kind of we don't know what data, the numbers. It's kind of it's basically basically it's kind of sounds like they're flying by the seat of their pants, but and then but really this idea of risk mitigation, really like down markets are the best time to
Yes.
deploy capital and execute, but then you also have to consider risk. You don't want to get in over your head, over leverage, and and miss out on other opportunities. You have to be extremely strategic these days. These kind of old advice doesn't really work in this
No
market.
pain, no gain. People are, everybody wants to have their cake and eat it too. And exactly and precisely what you said is the whole point. It's like when the market is trending downwards, you have this the reverse FOMO, It's like, oh, I'm afraid to join. Like maybe it's going to reduce. But then it started to pick back up. And then you look back to 2008 and you're like, what have I done? Properties were so cheap. How did I not buy it then? So that's why I always like to look at like my personal opinion and analysis. I try to look at like at the conditions from a pseudo objective metrics. If people are making, in my, like I'm a techie, I'm coming again, like I used to be a director in tech companies, like I work for FANG. And if I see people that are making, like in my levels, let's say 350 to 500 grand a year, even if recession hits, even if you reduce the salary by 20%, 25%, there's still a bunch of juice if you're buying a property for something like 450. Like the amount of yearly income compared to property price point doesn't make sense to me in my current market. I am not, by the way, I'm not here to publish Austin and all. That's really not my goal. I would absolutely love, I have like a YouTube channel that is more focused on education. So if anybody wants to, check it out, I would absolutely appreciate it. But I am here to say that education is key and understanding the markets is key. And right now, as the market is right, like I don't know how it's like in every state, but I can see in several markets the healing that starts. You can see the trends. I do like a live stream about my specific market and I share just the raw data. And you can see the healing starts. So if you think that something is starting to heal back up after the bottom out, yeah, maybe it's not the cheapest, maybe it's a bit slightly after it was the cheapest, but you can already see the upward trend. So if you want to hop on the train, maybe do that. And if you're thinking that it's going to decrease in value, then definitely don't.
It's always about the upwards long-term trend for macro investors, 5, 10, 15 years. Yeah, I love that analogy. Was like, 08, 09, that was like the best time to get into these really cheap properties. And then yeah, really interesting. So I'm sure a lot of the audience out here is familiar with fire, but and there's so many different ways of fire. And so tell us about like real estate investing as a means to fire. How is it different from stocks and, or starting a company? Tell us more.
Of course. So I would say that contrary to a lot of popular belief, and especially belief that are kind of pushed by realtor, even though I am a realtor, I really don't perceive myself as a realtor. I perceive myself as an engineer. That's what I truly am. This is my education and who I am like in my core.
Yeah.
I don't think that real estate is like the quick and easy way to cash flow and get rich and yada, yada, yada. When you go into like a super cash flow market, typically it's like there's a reason that it cash flows. Cash flow is like high cash flow is being generated by an area that has a low demand for like long-term housing. Like people don't really want to buy their primary residence, but they live there because of their whatever. They can't afford a house, their condition, whatever. That is not necessarily the best. Like, again, not to say anything bad about anybody, but maybe that's not the people that all of us want to deal with. So I'm saying that because in my personal and professional opinion, real estate is a long-term game. You invest in real estate and you build your equity slowly, but surely. And this last portion of the quote unquote surely is something that some people will disagree with. I'm obviously I'm agreeing with myself. I'm thinking that it's so much more consistent than markets that are more volatile in nature and are more dependent on technology or, let's say, Bitcoin. Bitcoin shot up in value like crazy. Tesla stock, like, when I bought my first Tesla, I was like, it's going to skyrocket. I didn't buy any stock. And, hindsight, I'm like, what? How did I not do it? But it's like the risk is so much higher. With real estate, what is going to happen? People are not going to live in the house anymore? No. What can happen is that values will decrease. But in order for the values to decrease, something in a strong metropolis, something huge needs to happen. The economy needs to break. If the economy breaks down, I'm already losing. Like, what are my alternative investments? So, to your question, my personal strategy is investing in real estate. Right now, I am, wow, yeah. I wanted to say I'm young. I'm not really young. I'm like, mid. I feel like I'm young,
Yeah.
and I still have like some good producing years ahead of me. So I am doing what I would call deployment. I'm taking my capital and I'm deploying my capital in more and more, avenues. But then once I get to the point, then I'm like, all right, time to exit. Then I will start to maybe I'll sell a couple of properties and kind of, return my loan on the other ones. Maybe I'll just start to diverge some of my income instead of towards deployment, towards returning my and then I will strategize to exit while I'm still, not super old. I don't want to be this like 65-year-old that has 35 properties with a bunch of mortgages on them. It just that's not like, and then my children, they inherit it and it cash flows better. They don't pay any capital gains because you can reset the capital gain if you do like a real estate investments well. But that's not really my goal. I want to enjoy my hard-earned money. So yeah. So what I'm doing right now, I'm deploying. I think probably in anywhere between 3 to 5 years, I will start to exit. And when I'm 40, and every time I say the age, like if initially I aimed for 50. With my current income, I'm aiming for like 45. I am probably going to do it before 45 with my current trajectory. My goal is to have my properties free and clear. And basically, if you have like 11 to 12 properties in Austin, you're going to make like net, I don't know, like probably a good 15 grand. Yeah, I can live from 15 grand if I don't have any housing expenses. And I'm not a lazy person. I'm always hustling. I'm working. I hope by that time my YouTube channel and whatever would be a bit more advanced, and I would be able to mentor others and help others and just do the things that I love doing, which is like teaching. That's kind of my passion. Even though, today I'm more in the kind of acquisition side and startup side.
Yeah.
That's kind of my own personal goal. I'm sorry.
Yeah.
Too long of an answer.
Yeah, no.
I hope it was mildly entertaining.
Yeah. It was really good because like I said, you need to not only do you have to work for it, but you have to, enjoy it. And my one of my mentors was like, yeah, what's the point of working so hard and you just store it in a bank and let the bankers take it and lend it out and then so it's really, you have to enjoy the fruits of your labor as well. So really interesting. Go ahead.
A person that I consider to be a mentor of mine is a guy that I respect a lot, from Texas born and raised, is 65 years of age. He's retired, just recently retired, and very, very sharp guy, extremely sharp. But the thing with this person that I love and admire is that up until today, he is working. His real estate operation became his passion and hobby. Now, good for him. Seriously, I have nothing but respect for this guy. That's not what I want. I want my hobby to be my children, my toys, a mentor, not me literally painting houses. Like, it doesn't really make sense to me. And I think that's one of the things that we kind of lose, we have our eyes on the prize, and we get so entangled with the journey, and we forget that it's just a mean to an end. It's not the actual end. Me, renovating properties for me. It's not really the end, not the end goal. So what I'm saying is have an exit plan, know what you're aiming for, but make sure that you also enjoy the fruits of your hard labor, because what's the point if you don't, right?
Yeah, exactly. You can't take it with you when we leave. So great conversation. I know you have a YouTube channel. How can people find that? I know you're on Instagram, and tell people how they can follow you, contact you, etc.
Sure thing. If anybody wants to check out my YouTube channel, my name is Yochanan. I'm sure that you can't spell it because it's a weird Israeli name, but I'm sure that Christopher will put it in the notes of the podcast. It's OR and then YO. You can also look for my company, The Investory. If you look for The Investory, you're going to find all of the material. I have both an English YouTube page and a Hebrew one. Being bilingual absolutely suck. Absolutely don't recommend anyone. It's so hard in content. And my YouTube channel is all about education. I'm trying to teach people how to properly take a mortgage, how to optimize the mortgage, to understand taxes in real estate, to understand how to analyze real estate, the difference between renting a property and owning a property, and the fact that there is no one way. You can do both, but you need to understand it, and so on and so forth. This is kind of my mission. If anybody is considering either to move to Austin or invest in Austin and think that I might be a positive person in their lives, by all means, find me. I'm sure you can. If you find it interesting enough, you'll be able to find me. My information is kind of everywhere. And again, thank you so very much for hosting me. I really appreciate it.
Yeah, and thanks for reaching out, and thanks for coming onto the podcast. I really enjoyed the conversation. I love your energy. And for all the listeners out there, OR's resources will be in the links and show notes. And with that, thanks so much for coming onto the podcast.
Sure thing. Thank you.